Welcome to this special APO discussion here on Grow Invest. I have the pleasure of speaking with Robert Almeida from the NCB Financial Group and Angus Young, CEO of NCB Capital Markets. What we'll be doing is a recap of the offer, go through the salient points, and then we'll just ask some questions about, why this APO, why now, and some of the other questions that you've submitted through our community. So it's going to be a great conversation as usual. So please join me in welcoming Robert and Angus. Hi Robert. Hi, Angus.
Hi, good evening, everyone.
Good evening.
Thank you so much for joining us. I was saying to Angus, backstage, finally, we're able to have a conversation. We've known each other for a while, but we've never had the pleasure of doing an interview.
Yeah, we soon fix that, Jermaine.
Yes, we will. Well, and welcome back, Robert. I really enjoyed our conversation a few months ago.
Thank you. So did I. I'm looking forward to this one.
Great. All right, so let's help those who might not have heard about the offer before. So Angus, I'll ask you just maybe 2-3 minutes to recap the offer. How much is NCB Financial Group seeking to raise and why?
Sure. So NCBFG is seeking to raise circa 5 billion Jamaican dollars via the issuance of 78.5 million shares via an APO issuance. Now, the use of proceeds of this capital is really common with the theme of what we've been doing over the last couple quarters, which is really hinged on the reallocation of capital within the group. So the NCB Financial Group from July 2023 to now have pursuing probably 4 distinct fiscal strategies, all related to capital reallocation to put NCBFG in a position whereby we make it more agile and we make it more, give it more ability to pursue more aggressively organic and inorganic growth strategies. So the purpose of the APO is to de-leverage NCBFG, which is just one of about 4 distinct strategies for this reallocation. Now, the APO opens on the 6th of May, and we intend at this point in time to close it off on the 27th of May. Now, we're going out to the market for 5 billion J. We do have the ability to upsize same to circa 7.6 billion J via the APO structure. So at this point in time, what I would say to you, Jermaine, is this. Quite frankly, I don't know if there will be ever another opportunity to buy NCBFG at $65. The opportunity to do so at this point in time is what I view as one of those once-in-a-lifetime opportunities. And it's very distinct because of the current day scenario and the stage of the capital reallocation that we've pursued at NCBFG. Now, one of the questions I'm sure you're asking, you would like to ask, Jermaine, is why an APO and possibly why $65? So if you don't mind, should I jump straight into that?
Sure, please do.
All right. We were very deliberate in terms of the strategy of using an APO versus a rights issue. And the 2 main points to support that strategy is we really wanted to broaden the investor base of NCBFG. And that really is a function of NCBFG is Jamaica and Jamaica is NCB. So we want to have ownership, the ownership pie broadened, and that is the main reason we would have chosen an APO versus a rights issue. The second reasoning is really the use of proceeds. We really want to bring J dollars in. The currency that we desire to have is J dollars, given the use of proceeds. And of course, as you know, the NCBFG share is cross-listed on both the Jamaica Stock Exchange and the Trinidad and Tobago Stock Exchange. But at this point in time, we want to prioritize raising the J dollar. So those would be the 2 main reasons for pursuing the APO strategy as opposed to the rights issue strategy. Now,
Okay.
Yeah, sorry. Over to you, Jermaine.
Okay, so I was gonna say we'll certainly dig into some of what you said. I
Sure.
think I'd love to hear more about just some of the points that you mentioned, but not just yet. What I wanted to do was get into the use of proceeds and specifically hear from Robert about, because we had a conversation a few months ago about this ongoing strategy of NCB Financial Group, and so I wanted to see and understand from you, Robert, how this ties into all of that.
Sure. Thanks, Jermaine. So what I'd ask you to think about first, Jermaine, is resiliency. Let's start with that. So what does resiliency mean? Resiliency means you're prepared for anything. Angus used the word agile. We could talk about financial flexibility. And so when we talk about using a vague term, I've heard that said, like bolster capital, what it really means is it means increasing financial flexibility to respond to the most unexpected of shocks, and financial flexibility to be opportunistic and jump on opportunities when you see them, take advantage of them when they arise. So our goal is and we have, and that's the use of capital. So what we're looking at is we have many different sources of capital, and we have certain uses. And I spoke with you about this before. That says, from a use perspective, we can use capital to pay down debt. We can use capital to pay dividends. We can use capital to fund and invest in growth. And these are all the uses of capital that we can have. On the sources side, we have profits. We start off at a consolidated level. We earn about $30 billion a year in consolidated profit. So that's one of our big sources of capital. Then we have a multitude of other sources of capital, being APO, so issuance of shares, which is necessary for growth. We have divestitures of non-core assets and reallocations within the group. So more specifically for this particular APO, we're going to use the money, and we've been very clear, we're going to use the money to pay down debt. But I need to put it into the context of, it's about $5 billion in the context of inflows that are far greater than that, given that we earn about $30 billion of net profit per year, and more than half of that gets reinvested in growth every year. So when you take a look at the whole pie, that's why sometimes we'll use a vague term like bolster capital to be more agile. It's because by selling non-core assets, by raising some equity, issuing some equity, we're able to pay down debt, increase our financial flexibility, and reinvest our profits in growth. And that's what we're talking about. But to be very clear, the actual use of proceeds would be to pay down debt. But the second order effect of that is it provides more financial flexibility for resilience. It also means that we can reinvest a whole lot more of our $30 billion of profits a year in growth.
Okay, so I'll ask you this then. So let's say that we fast forward a little bit and we have those funds from the APO to apply, right? How much is going to debt? How much is going to bolstering capital?
So again, just technically, Jermaine, all $5 billion that's raised increases capital. So that's just accounting. It comes in, equity goes up by $5 billion. Debt, we'll use all of it to pay down debt. So debt would go down $5 billion. What I'm trying to do is to say, people are trying to look at it very narrowly. This $5 billion, what they're ignoring is the $25 billion or $30 billion of consolidated profit that we earn every single year, which is more than most companies are worth in Jamaica. So that's our reinvestment capital. That's our capital to, even after reinvest, pay some in dividends, and then we're using the proceeds of the APO to delever, as we will use proceeds from divestitures of non-core assets.
Okay. So let me then take it a step further, because one of the conversations that we had, and you mentioned it in our interview, the managing of expenses, right? You've talked about improving efficiency. So how does this step of the APO add to that, right? How much closer do you you get to that target in terms of your expense ratio, and what can we expect to be the effect of that?
That's a great question, Jermaine. So out of our profits, when we've talked about an expense ratio that got as high as about 80%. And what that means is that about the other side of that is that means about 20% is left over for basically to pay interest, taxes, and then hit net profit. So we end up with something less than 20% as net profit after we pay for interest and taxes. We've talked about taking that expense ratio from 80% down to 60%. The other side of that means that the 20% actually, so taking the 80% down to 60, the other side of that means the 20% that's left over for profit goes up to 40. So that's a doubling of the net earnings that's available for interest, taxes, and profits. Then, like I said, it's the earnings that's available for interest, taxes, and profits. Interest is another expense line in there that comes before we get to the bottom line of profits. So by reducing the debt, we will also end up reducing our interest expense. We should end up reducing our interest expense, which will enable us to have more available for distributable profits.
Yeah, that was the part that I was.
But the big part of the expense reduction is not the interest reduction. The big part of the expense reduction is the $8 billion in operating expenses we already reduced. And the other big part is that as we grow our revenues, our expenses will hold more flat because we've got a very big platform with a lot of scale that we can layer on more revenue on. And that will take our expense ratio down further. And the main message is that when we go from an 80% expense ratio down to a 60% expense ratio, that's equivalent to doubling our profits.
So you're saying that shareholders can look forward to essentially more profits and, that word I love to hear, which is dividends. At some point, that will flow out to more dividends.
Profits and interest is basically a use of cash before you get to dividends. So there's pre-interest profits, EBIT, and then you've got net profit, which means you've paid your interest. So yes, so both the performance improvement in the business as well as the reduction of debt flows into net profit, which flows into dividends.
Okay. I'll leave it there for now. What I wanted to ask in terms of, so Angus, I wanted to switch to you for a second. What would you say is the value proposition for this APO in the context of the average investor, the retail investor? You're muted.
Mute.
Okay, apologies. Let's go back to 2019. In 2019, the share price was in excess of $200. But we went into the pandemic where there was a moratorium on the payment of dividends that was a regulatory requirement. However, NCB stayed in that moratorium for a couple reasons, and the share price was hammered because we weren't paying dividends. So if you think back to July 2023, the share price would have been $65. I'm going to outline 4 very, very clear fiscal strategies and the status of each one of them that has taken place since July to today, where we're here at the APO at $65. And I'm going to tell you why this creates value, because it creates distance between perception and reality. And when you have a scenario where there's a distance between perception and reality, there's value to be unlocked. One of the first things we did in October 2023 was cut $8 billion, circa $50 million US in recurrent expenditure off the bat, all the way. The second thing that we would have done is that we would have identified about 15 billion Jamaican dollars in excess capital in our OpCos, which are all regulated entities, by the way. And we'd have identified that 15 billion, which is about 96 million US dollars, and upstream that capital to NCBFG. The third thing, which is public knowledge, is we would have entered into a sale agreement for our bank in the Cayman Islands. That sale agreement was executed, and that transaction is now before the regulators in the Cayman Islands for approval. The fourth fiscal initiative, Jermaine, is the APO, which, as you know, we're seeking to raise $5 billion. The use of proceeds of those four fiscal initiatives are all focused on deleveraging NCBFG to achieve the status that Rob spoke about and create that sustainability, that resilience, and that agility at the NCBFG level. So, Jermaine, if the share price was $65 when we embarked on that journey in June, July 2013, and we're here offering these shares at $65, there's a tremendous distance between perception and reality. And that is one of the environments where you can create wealth, because once you have that mismatch, there's a lot of value to be unleashed. So $65 for the machinery that is NCBFG, which is, in and around book value, perhaps a little lower than book value, is a tremendous opportunity just as is. What we're not taking into consideration, however, are the strategies that we're now deploying that are not fiscal capital reallocation type strategies, but growth strategies. So, Jermaine, for a long time, the group would have operated in silos. Now, what do I mean by that? For example, NCBFG pretty much operated as a whole co. So 100% of NCBJ, circa 62% of GHL, and we were managing those businesses separately. That's one. Now, within NCBJ, we have a couple subsidiaries, and those subsidiaries, I must admit, also had a culture of being silo-like in their behavior. One division is doing their thing, the other is doing the other. They're not really talking to each other. And you have scenarios where divisions are talking to the same client without each other knowing. What we've done in recent times, Jermaine, is embark on a share of wallet initiative to smash those silos and have the business now operate as one, and go to clients and say, we bring the depth and the breadth of the NCB Financial Group to your table to shift your curve in unison. Then the third opportunity for growth is really, if you think about it, Jermaine, if you drive around Jamaica, in New Kingston, in Mobay, in Ocho Rios, St. Thomas in recent times for me, every block there is activity taking place. There's construction, there's residential, there is commercial, there's corporate construction, there are power plants being built, there are infrastructure like bridges and roads all over Jamaica. All of these things require finance and insurance. And those are products and services that are core to our business. So what I'm trying to say to you, Jermaine, aside from it being $65 in July last year and $65 now, not taking into consideration the four fiscal initiatives, some of which are way down the wicket and some of which have already been executed, they're the growth strategies that are being deployed now. And with respect to the last growth strategy of basically saying, Jermaine, NCB is so important to Jamaica that if Jamaica caught a coal, NCB would catch the coal. If NCB caught a coal, Jamaica would catch the coal. NCB is Jamaica. Jamaica is NCB. That's how important we are to the rock, so to speak. And if the tide of the rock is rising, as everyone can see, and also with the debt to GDP of the sovereign heading south, then an institution that's as systemically important as NCB will rise with the tide. So I'm here to propose to you, Jermaine, that without the growth strategies that I've outlined, without the growth opportunities that I would have defined to you, $65 is value laden simply because of what we've done between July and now. Then you incorporate these growth strategies into the equation, and you really have an exponential an opportunity to earn exponential increase in your wealth. And I would say this to you. The APO effectively could very well be the democratization of an opportunity to own a piece of the rock while the rock is rising. How about that?
Okay. All right. Interesting. I saw Rob's expression as you were explaining, and definitely Robert approves of what you've said. What I will ask you to just kind of close off that question in terms of value proposition. Persons will ask, why should I buy shares at a higher price than what it's currently trading at on the market?
Absolutely. Great question. Now, Jermaine, I must tell you, I moved to Jamaica in December 2023. And of course, I'm immersing myself in the culture. And I noticed that in Jamaica, any sort of APO is expected to come to market at a discount to the market price, right? And I would say this to you, and I have 2 decades in investment banking and probably 10 years worth of leadership in investment banking. I always tell my team this: NCB plays the long game. We are the gold standard. When we do transactions, we put them through a framework of governance and risk management that is thorough. So when something comes out of factory, Jermaine, it's proper, gold standard, it's for the long term. So what I would say to you is this. In investment banking, you stick to the fundamentals. But in my part of the world, we belong to inefficient markets. So therefore, we stick to the fundamentals, but we tweak for domestic nuances. There is this culture whereby firms coming to market at a discount to whatever the market price is the expectation. And I'm here to say to you that if you look at the trades, if you look at the queues that are sub 65, they're very, very thin. And the smart investor would be clearing those queues in anticipation of the close off of this APO. That's what the smart investor should be doing. I would never recommend to Rob or whoever else that NCB ever go to market at sub $65. So I view it as a market inefficiency, something related to domestic nuances and culture. But at the end of the day, we did announce to the market a couple of quarters ago through an extraordinary AGM that we were seeking approval to do an APO. And I believe that the behavior of the market is one that has created this anticipation for the APO. And in my opinion, that has also held back the share price. So coming to market now, I get it. We're in a very, very tight monetary policy environment. Not the best time to come to market, but we believe so strongly in the value proposition. And we want to get this APO out of the way because I do believe the anticipation by the market, given the announcements made in the extraordinary general meetings, we need to put it into the past, Jimmy. So for those reasons, we're full speed ahead at $65 with very, very, very thin trading in the queues at sub 65. And I reiterate, the smart investor should be clearing those queues.
Jermaine, if I can I add something?
Yes, please.
Sure. So I spent the majority of my career in investing, and would follow the principles of Warren Buffett pretty extensively. So one of the things that Warren Buffett and Charlie Munger would say: price is what you pay, value is what you get. You will never create wealth by buying $65 companies at $62 a share, because all you'll make is $3 forever. That's it. And that was what Charlie Munger used to call cigar butt investing. That says you're not going to create wealth by picking up cigar butts with a little bit of tobacco left in them. What you're going to create wealth is by buying companies that are going to grow, that have the potential to go up 1 times, 2 times, 3 times, 4 times. Companies that are going to be around for 10, 20, 30, 40, 50 years. They have lasting value. And it's the value that determines your wealth creation, not whether you... So buying a $65 company for $62 is just not the way to create wealth. It's just the wrong place to focus energy. If you want to create wealth, what you got to do is you got to buy the company that's going to keep on growing and produce returns for many, many more years to come. And you buy that at a reasonable price. And that was the story of Warren Buffett and Charlie Munger. That's what their whole investing approach was about. And they actually talked about cigar butt investing. They talked about not getting fooled by things like you just described it. Maybe I should be buying a $65 company at 62. As Angus said, the smart investor should clear the market. That's without a doubt. But that'll clear very quickly based on the thin queues. The real point is the smart investor should really be thinking about what's the value I intend to get from this. And that's the more important question. Price is what you pay, value is what you get.
Okay. I'll take that. So then what I'll ask you, and this can go to either Angus or Robert. How do you choose between, or walk me through the thought process of choosing between an APO versus rights issue versus maybe any other form of capital raise? What would have gone into your discussions and considerations for that?
The main, Angus touched on this before. Main answer would be is that NCB is the people's bank. The people should own more of NCB, and so why APO not rights issue? That would be the reason. Broaden the shareholder base, so that NCB is more democratized. We've talked about like why are we raising the money and the use of proceeds. So that's its own item in terms of why APO versus rights issue. APO because you want to broaden the shareholder base, and that's because we truly believe that the ownership of NCB should be more democratized.
Okay. Anything to add to that, Angus?
No, I mean, I think Rob articulated it extremely well. And I would have mentioned 4 distinct strategies, Jermaine, in terms of our capital reallocation. APO is just one of 4. And dare I say, Jermaine, we have the luxury of timing it whenever we want to do it, and the luxury of doing it after the first 3 have been executed, etc. So it's part of a broader plan, a piece of a larger plan, basically.
Yeah, thanks, Angus, for saying that. And I gotta keep stressing, Jermaine, the largest piece of our capital raising is actually profitability driven by growth and expense reduction, efficiency. So growth multiplied by efficiency is what creates more capital than we will raise through our other activities.
Okay. All right, let's take some questions from the audience. So there's a question from Limitless Podcast here asking that you got previously shareholder approval to issue more shares than those being issued in this APO. Are we to expect future APOs from NCBFG?
There would be no future APOs planned right now. So the reason I'm hesitating, somebody asked a question that says, do you plan to ever do another share issuance? Well, if we plan to grow, the answer is we plan to take over the world. We'll plan to do more share issuances. So that's why I hesitate on the answer. I don't want the hesitation to say, oh, he's watching his words. That's not the point. The point is there is no plan to do a future APO. Angus mentioned we have multiple strategies. We've sequenced them. We've timed them. And we're executing them in a balance that says we've done some through capital reallocation, we've done some through sales of non-core assets, we've done a significant amount by expense reduction generating profit, and now we're doing this APO in this size and at this price because we think it's accretive to our current shareholders. We wouldn't do it if we didn't think it was accretive to our current shareholders. And quite frankly, if we did a whole lot more, if we did 5 times as much money as this at this price, it probably wouldn't be accretive to our current shareholders. So that wouldn't be the right thing. So as Angus said, we've had the luxury and the benefit of being able to choose how much of each to do. We've pushed on multiple strategies. And so there would be no plans to do another APO.
Okay. So there's another question here. Does NCB have a target dividend yield based on the APO price?
I think based on the APO price. So probably I talked before about saying we'd like to target around a 50% payout ratio, right? And if you take a look at our earnings, we should be able to get to about on this. Sorry. at our most recent dividends, we're tracking at around $2 a share, right? So let's try to start with that. That would be about 3% dividend yield, and we'd expect, I talked about before, we'd expect to be growing our profitability and growing dividends. So probably if you were to extrapolate from the 3% we're at right now, that'll give you a sense that we would expect to be north of 5-6%.
Okay. All right. So someone here, Michael Steele, is asking, how does a Canadian take part? Is this possible? I think that might be for you, Angus.
No problem. And anyone is welcome to take part in the APO. You just need to have a stock brokerage account registered with the Jamaica Stock Exchange. In this instance, you can log on to goipo.jncb.com, and everything can be onboarded digitally once you're a client of NCB. And if you're not a client of NCB, you would just have to visit any one of our branches to be onboarded into our system. If you do have a broker account that is not with NCB, you can still go to goipo.jncb.com and subscribe. Now, the APO is in J dollars, but we would be able to facilitate subscriptions in US dollars, but know that there would be a conversion of the currency prior to the subscription. So it can be facilitated, and I would encourage Michael that he reaches out to NCB Capital Markets, or leave the information and we can reach out to you, Michael.
Okay. All right. So there's a question here of where do we go? Kedisha, we just answered that one. So you'd go to
goipo.jncb.com. It's seamless. In 10 minutes, you would have your subscription submitted.
Okay. All right. I see this question here from Daniel Ferguson. Will NCBFG issue shares as dividends instead of cash for next quarter? I'm not sure.
I think we've concluded that that's too difficult to do. I often like the idea of offering customers shareholders the opportunity to choose between dividend reinvestment, like getting shares as dividends, but it's too complicated and probably it introduces to a higher cost.
Okay. I just processed what he was asking. So okay, that would be interesting, but I imagine, as you said, the administrative side of that maybe.
Yeah.
Truth be told, when you get your dividends, it's a public share. You could get back into the queue and come right back in.
Well, so let me tell you, I thought that, so for example, I invest in the US market. I have this ability to, when I get my dividend in cash, it stays in cash for the very next day. It's used to purchase shares. So it's automatic in that way.
Yeah.
So I think if we're able, and maybe this is something for NCB capital markets to look into, but if it can be automatic where the shares are purchased on my behalf, where I don't have to manually do it, that would, I think, really be helpful.
Point taken, Jimmy.
All right, so let's ask a couple more questions since I'm not seeing any in the chat right now. So I really want to talk about some of the things that we mentioned earlier. So there was talk about, 2019 NCB, share price and the history of that. So let's look forward a little bit. What can we really expect in terms of share price performance? Because I've heard from both of you what sounds to be as if, this offer is pretty much going on at a deal based on what you both are saying. And so what would you say to the investor is looking and saying, well, I've been a shareholder of NCB for a number of years. I've seen my shares go down in value. What can I look forward to?
Sure. Rob, you mind if I kick off?
Sure, go ahead.
Yeah. All right. So Jimmy, I like to deal in facts, right? As much as I pride myself in having some degree of clairvoyance, I like to deal in facts. Let's talk about the environment. We're in a very high interest rate environment, and we think about higher for longer type thematics, right? Driven by where the Fed has interest rates. When interest rates are high, the stock market is depressed. But what I've noticed in Jamaica is that when you look, by and large, on average, the corporate earnings of Jamaican entities are upward sloping. They're all doing better. They're all becoming more profitable, more revenue. The earnings of the corporates in Jamaica, on average, are on an upward trajectory. Yet the stock market is depressed and possibly in a downward trajectory. That is really driven by an interest rate environment and, of course, tight liquidity conditions. But I would say this to you. The bet right now is on where the Fed will take rates. And the majority of gurus out there, and I'm not trying to be one of those, the majority of gurus out there would suggest that we are talking about very late 2024, perhaps even the beginning of 2025, before we identify the inflection point. When you look at inflation in Jamaica, as of March, it's 5.4%. It now falls within the band that the Bank of Jamaica has a focus on, which is 4 to 6%. That was followed by a statement by the Bank of Jamaica's governor that he could possibly be looking at a reduction in rates at some point in the future. So why am I mentioning all of this? Jermaine, if corporate earnings are this way and the stock market is this way, that distance between the two graphs is growing. And that just has a lot of value trapped in it. Because the moment the majority of people decide that the inflection point is on the horizon, that gap is going to close. But you're getting to invest in NCB at the widest possible point where those two graphs are at $65. So forget earnings, forget all those 4 capital reallocation strategies, forget the 4 or 5 growth strategies I would have mentioned, and forget the fact that NCB will rise in the tide with Jamaica. The simple fact that that inflection point is on the horizon is going to close the gap between earnings and the stock market. And that in itself will bring capital appreciation across the board to the stock market. And what you would find is this. Usually, for financial institutions, there's a multiplier effect when you have those types of movements, especially when an economy is moving in the right direction. And I should also mention, approximately 34% of the revenue, the top line revenue of the NCB Financial Group, originates from investment grade territories and also has product diversification in the sense that we're both in the insurance business and the bank business. We have dominant positions in the short and the long end of the markets. There is no peer comparison to NCBFG, quite frankly. And the timing of this APO, the $65, there are several shots of adrenaline where growth in the share price can be extracted. And I think that value proposition is very, very compelling.
All right. Anything to add to that, Robert?
No.
Okay. All right. So let me ask you both this. What does success look like? So let's say that so based on everything that you've mentioned, you sound both very confident about this offer and its appeal. Let's say that for some reason you're not able to get to the mark of raising 5 billion. Let's say it's 4 or 4.5 or some number that's lower than the target. What do you do in that event?
Sure.
And do you have any kind of plan Bs or plan Cs in the works?
Yeah. So we always, sorry, Rob, you go ahead.
That's good. Jermaine, that's good. From the get-go, Hank said we've had plan A, B, C, D,
That's
E, F, and G
yes.
all going. So
Yes.
so this is just the way we operate. We have A, B, C, D, E, F, G always going. And so it's hard for us to fathom again, NCB is $2.2 trillion of assets. It's just hard to fathom not being able to raise $5 billion in equity when the prospects are this good and as Angus says, you're at the right point in the inflection curve. So it's hard to fathom that. But for the first question, we have plan A, B, C, D, E, F, G, and we're always pushing them forward. So it comes in short. That's fine. I think the part of it, you started off by saying, what would be the definition of success? What would we love to see? What would be utopia? Utopia would be 1 million Jamaicans investing, buying the minimum of 100 shares $6,500 Jamaican, because that would mean perfection on the People's Bank being owned by the people.
Okay, interesting way to look at it. I never looked at it that way. Actually, what I did was did the math between your number of existing shareholders and how many would need to take ownership for you to fully, have the offer subscribed. But interesting.
We have far more than 44,000. We have about 44,000 shareholders, right? We have
Yeah.
far more than 44,000 customers.
Okay. Yeah.
For every customer of ours should be asking themselves the question: if I'm a customer of NCB, why am I not a shareholder of NCB? If I believe in the future of like I said, you just drive around and you see everything. So there's going to be more houses, there's going to be more mortgages, there's going to be more payroll savings, there's going to be more mortgage payments, there's going to be more house insurance, there's going to be car insurance, there's going to be more cybersecurity. There's just going to be all of these things that you need financial services to enable. Every company is going to need growth capital. They're going to need equity. They're going to need debt. They're going to need payable solutions, receivable solutions. They're going to need insurance solutions. And then that growing population who's working for them all need payroll processing. Then they also need pensions and they need health insurance. So if you take all of that into account and you take a look at the market share of NCB in all of those categories, you'd recognize that if you believed that there's going to be more people working in Jamaica a year from now than are working in Jamaica today, if you believed that there's going to be more housing in Jamaica over the next few years than there is today, if you believe there will be more cars, more bridges, more renewable power, more all of these things than there is today, then you'd say, well, how is all of that? What's the financial side of all of that? The mirror image, which is the financial side. Oh, that's all of the things that the NCB group does. And NCB is the only one that does it all at scale. So you would then say, oh, well, that must mean that an entity like NCB will do well. And then you double down on that says we happen to have gone through a period where we allowed our efficiency to deteriorate. So there's the second benefit of improving the efficiency. And so you get that on top of it. I think that's the key thing people have to just think about is why, if you're doing business with NCB, why would you not want to own a piece of NCB? Because the only way to create wealth is through ownership. If you don't own, you can't create wealth. You just look around the world and say, who are the wealthy people? They own stuff. And so you have to own. And if you don't own a piece of something that everybody wants and uses, then it's more risky. So when you own a piece, as Angus says, you own a piece of the rock. There was a phrase that says, if you buy milk, you should own a cow. So
Yes, I've heard that before. I've heard that one.
Yeah. I think everyone's heard that one. But yet sometimes common sense is the most uncommon thing around, right? So if you believe in the future of Jamaica, then NCB at this price is incredibly good. And alternatively, if you don't believe in the future of Jamaica, then you know what? That's probably the one hole.
Okay. Angus, anything to add to that?
No, I think the APO. I mean, I know Rob laughs at me, but the APO at the minimum amount of shares you can buy in the APO is 100, right? And I can't think of a better way to democratize access to getting on the ownership of the rock, to get on that train, to take part in what's happening to Jamaica and the region. The democratization of that opportunity, by definition, is this APO.
Angus and Jermaine, sorry, there's a lot of talk right now. We talk a lot about sustainability. We talk about financial inclusion. And when we talk about financial inclusion, we talk about lots of things, except what I would say is the most important thing. The most important thing in financial inclusion is the ability for everybody to own a really high quality asset. And so when we talk about financial inclusion, I can't think of a better financial inclusion initiative underway right now than this APO.
Okay. All right. So let me take some more questions from the chat. Devon is asking, why wasn't this APO registered in Trinidad to make it easier for persons in that market to participate and avoid being diluted?
Well, okay. So what I would say to you is this: given the use of proceeds and the capital allocation strategies that we have, our focus would really be raising capital in J dollars.
Okay. So if you were to raise in TT, you'd have to do that conversion.
Yeah, exactly. Trinidadians, whoever else in the region can subscribe to the APO. Absolutely. They would just have to have the right currency to do so.
Okay. All right. Michael is asking, can you disclose if senior management are buyers at this time?
The reserve pool on the APO is 1% of the issue, which I think is 785,000 shares. And staff of NCBFG, which includes Guardian, by the way, have an opportunity to buy at $58.50, which is a 10% discount to the $65. So I am confident that the staff pool will be spoken for.
Okay.
Jermaine, sorry, I gotta look. We're in blackout right now because so you're asking a question of senior management buying. So at this time, senior managers aren't allowed to buy. Otherwise, they'd probably the ones clearing the market, as the queues would be cleared by senior management. Because I'd like to think that they're all smart investors. So as Angus said, the smart investor would be clearing the queue. If we weren't in blackout, we'd probably be clearing the queue.
Okay. Ricardo is asking, why do we keep the currency in JMD and not USD if you're able to subscribe in USD? I think that's further to what you had said earlier, Angus, where if you are able to apply in USD, you would take it. I guess, Ricardo is asking, why would you keep it in JMD in that case?
So I think the raise is being done in GMD because the share is a GMD listed share. Remember, on the Jamaica Stock Exchange, it's a J dollar share, not a US dollar share. I'll say this to you, having traveled the region and understanding all the different domestic nuances that we have in the Caribbean region, I would say that the J dollar is one that is prized simply because it's dynamic, is market driven, and efficient.
Okay. Philip says, how does NCB Capital Markets public bond and IPO or rights issue pipeline look for the rest of the year?
We don't have a public bond in issue at this point in time. There is a highly rated debt issuance that the NCBFG has that's maturing soon, that NCB Cap Markets is acting as a ranger, and that matures soon. And then the IPO opens almost at the same time. So NCB Capital Markets does not have a public bond in the space, but it is possible that we would have.
Angus,
Yes.
I think they're asking about your business pipeline.
Yes.
They're asking, this is your performance review.
Okay. I misread that. Okay, so let me be frank. Let me be frank with you guys. I'm going to make a bold statement. The equity capital markets have been depressed for some time. And I am going to make a statement to you guys and the listeners that NCB capital markets, equity capital markets deal pipeline will bring the equity capital markets back. We have the APO that we're doing with NCBFG, but there are IPOs that we have in our deal pipeline that will be done in this year. And these equity capital markets transactions will bring the equity capital markets back. And we're very confident of that. That goes back to a statement, Jermaine, that I made earlier. NCB plays the long game. We consider ourselves the gold standard. When a transactions come to us, it goes through a very, very thorough process. When it comes out at the end of the factory, rest assured, it's fundamentally sound. And those are the type of transactions that we're going to bring to the market in short order. And I'm very, very proud to say that we think we're going to bring the equity capital markets back in this year.
Okay, I look forward to covering those reviews when they come.
I'd like to thank the person who asked that question. We're going to put that right into Angus's scorecard.
This is exciting stuff, and I never forget the responsibility that NCB has in the market, given who we are. And I would say this to you guys: there are many transactions that come to us, and we say no, and the transactions go elsewhere, and they still get done, and that's fine. But we play the long game, guys. So when it comes out of our factory, it's fundamentally sound, and it will survive the long game.
Okay. All right. So Donovan is saying, in greetings, he's new to this whole subject, but willing to learn and understand how to grow with this idea. Okay. So there's no question there. So Donovan, you're in the right place. Just feel free to scroll through our channel. You'll find multiple videos to help you understand investing and to understand this offer. Right. Devon is asking, how soon will the next APO be done to issue the remaining amount of shares for which the approval was given? Devon, we answered this question already, actually, but I don't know if you.
Yeah, I'll add a little bit more. The authorization. So it's a bit of a. You'll see a lot of companies out there who just have an unlimited number of shares authorized. The fact that we did not have an unlimited number of shares authorized, just a function of our articles and the way, kind of, just the way things are done. You know, most companies, at least like in North America, most would have an unlimited number of shares authorized. So when we got the authorization, we just went for a large number that we could put in there, and that would give us so that we don't have to keep on going back to our shareholders on a regular basis or whenever we need it. It doesn't add all the time so that we go back and get more authorized. But there's no plans to issue. I think it was the answer I provided previously. The authorization was large because it's just administratively it makes things better.
Okay. All right. Michael is asking, are private equity or other institutions taking part in the APO?
Yeah, so the APO is open to all and sundry, Jermaine. So we expect a broad appetite from the mom and pops, the individual investor, institutional investors, and corporates. We expect it across the board.
Okay. I think on that note as well, I'll ask if I think there's a question about brokers, as in usually for an offer, there are multiple brokers that are able to facilitate transactions. Is it only available on Go IPO currently?
Okay, so to go to Rob's point, Rob's concept of success here is 1 million Jamaicans, right, at 100 shares each. To do that, to prove the concept that Rob considers success, all brokers in Jamaica will be offered a chance to be a selling agent. We're in the process now of completing those agreements. All brokers in Jamaica will be offered a chance to be a selling agent. NCB Capital Markets is the lead and only broker, but all stockbrokers would be offered to be a selling agent, Jermaine, across the board.
Okay. And I think we were discussing this earlier, that you can, in fact, apply through Go IPO even if you have another brokerage account.
100%.
Okay. And then that would mean then it's not like you're opening a brokerage account with NCB. If you don't have one, it would just be sent to that account that you've assigned with.
That is correct. But of course, we would like you to have a brokerage account at NCB.
Of course. I believe those are all my questions in the chat right now. So what I'll ask you both to close out, so I'll ask you first, Angus, since you're on screen now. What would you say to somebody who's maybe watching this video for the first time, haven't watched the prospectus review, haven't heard anything about the offer? What would you say to them in just one or two minutes, the value of this offer, why they should be interested, and what's in it for them?
Sure, absolutely. You're never going to get this share to price to buy in a primary issuance at $65 again. This is a very unique opportunity, and the distance between perception and reality is quite wide. And in so doing, the upside, in my humble opinion, is exponential. I think that the capital appreciation opportunity here would far outweigh the dividend yield. And I think the whole democratization of this opportunity is really a unique opportunity.
Okay. All right. So, and then I'll say to you, Rob, what would you say to your investors, right? So we had this conversation before, investors who have been there since day one, investors who might have joined recently, and investors who may be considering the offer right now. What would you say to them, and how would you help them to see the vision that you have for NCB Financial Group?
Okay, so the vision we have for NCB Financial Group is as we described, Jermaine. It's think of the depth of the organization. We do everything at scale. So we have we should be the lowest cost producer of everything, because everything we do at scale, and we have this really broad array of all the financial products and services that the customer, whether it's corporate or individual, needs. So we can we can fill all of their needs, and we should be able to do it all as the low cost producer. When you put those two things together, that's a very powerful construct that does two things for customers. It gives them the convenience of the one-stop shop, and it gives it to them at the best price, at a great price. And when you put all of that together, that means that NCB Financial Group, NCB, should be growing with its market, and helping its market grow and benefiting from the growth of its market. So that's the vision we have. It's the one-stop shop, taking advantage of capital of scale, economies of scale, and then taking all of that to help customers create wealth, which is the ultimate byproduct, or core product really, is wealth management. I need my financial services done conveniently, efficiently, but at the end of the day, as a client, the highest value add that a financial institution give to me is help me get wealthy. And we think we can do that through the products and services we offer. And we think that this APO is actually the best way that we can help clients get wealthy.
Okay. All right. So two questions kind of snuck in under the line there. So let me just ask them quickly. Well, one comment from Devon is saying, I can't wait to see the share price back above 100. So he knows you both will get the job done. So that's a vote of confidence from
Thank you,
Devon
Devon.
there. And Philip is asking, when will we see the NCB capital markets get their app up to par with existing tech?
All right. So with that comment, you'd be surprised, but I would say that the NCB Capital Markets app is class leading. I don't know if there's any other app like that in Jamaica, where you have view of the queues, you can execute your trades, you can transfer money between your bank accounts and your brokerage accounts, etc. That is quite unique. My Money GA is an awesome platform, but it does not facilitate the trading of equities. So I would say to you that we're always looking for ways to make it better. But of course, as Rob said, my scorecard is on screen. It all comes down to ROI, right? Once I could justify the ROI, it'll get done.
Okay. So I'll ask you both, is there anything that maybe I have neglected to ask that you want to share before we close?
Not that you asked, Jermaine, but I would like to just emphasize maybe that principle that wealth creation requires ownership. Ownership requires an ownership of what? Ownership of businesses with two main attributes: the attributes of capital preservation and enduring growth. And so, from a framework perspective, I'd encourage people to just think about that. Say, if I want to create wealth, I'm going to need to own something. And if I'm going to own something, what should I own? Oh, I should own something that has the attributes of capital preservation. It'll be around for the next 5, 10, 15, 20, 25 years. And it has growth, and it'll grow over that time period. And then look around and say, what business has those attributes? And we obviously strongly believe that NCB has those attributes in much greater volumes than any other entity in the market.
Okay. And for you, Angus, I'll ask you, before you leave, any closing comments to just for those who might have just joined us, just recap the offer briefly. You know, how much shares are being issued, how much you're trying to raise, and where can they apply.
Sure. You can apply on goipo.jncb.com. Within 10 minutes, you can have your subscription submitted. We're seeking to raise 5 billion Jamaican dollars in the form of $78.5 million shares at $65 a share. For staff of the group, they would gain access to the APO at $58.50 for 1% allotment in the staff reserve pool. And what I would like to also share is that we're opening on Monday, I think May the 6th, and we look to close off on the 27th of May. So that would be, in a nutshell, the logistics of the offering, Jeremy.
And it's first come, first serve, right, Angus?
Absolutely, first come, first serve. Absolutely.
Okay, so what do I do if I have questions? Maybe I'm trying to apply and I'm not able to get through. Where can I go for support?
There is the Wealth Hub at NCB Capital Markets that you can call into, you can email into, you could walk into. We have the robustness of the customer care service that you could contact us on any of those medium, and we sort you out.
Okay. All right, great. Thanks to you both. I really wish you all the best in terms of the offer. And we do have one more conversation to come, which is scheduled for next week. And that should be it for coverage from the Learn, Grow, Invest side. But of course, if you're watching this and you have any questions, post them in the comments wherever you're watching this. And then we'll be sure to field those to the team. And then we'll get those answers for you as soon as possible. So thanks again, gentlemen. All the best for the offer.
Thanks a lot. Thanks, Jermaine.
Thanks, guys.
Bye.
Thank you, everyone. Bye.
All right, everyone. Thank you so much for joining me again. I'm just going to look through the chat real quick to ensure that we've got all the questions answered. Serenity saying thank you. You know, you've been waiting for this offer. That's good. I'm happy we could, be able to facilitate this transaction. Devon is saying, think long term. NCBFG is going places. Own a piece from now if you don't own any yet. So again, we would have covered just the details of the offer in our prospectus review video. I really do encourage you to take the time, go through it. The video is 1 hour. Watch it through it. If you don't understand anything, feel free to place any questions under that video. And really do take the time to understand the offer. Go through this interview from the start if you joined us late, and be sure to watch our next video next week, Thursday at 9 p.m. We're going to just be doing just a Q&A. So we're going to take all your questions, go through the ones that maybe we asked before that we think may be relevant to ask again, and just to ensure that you fully understand the offer from all angles and you can make an informed investment decision. So thanks to everyone for watching. I really do appreciate your time. Be sure to like this video on all platforms that you're watching from. And yeah, we look forward to seeing any questions that you may have, and all the best with your investment decisions.